All right, all right, all right. Good evening, good morning, good afternoon to you, wherever you are in this beautiful world. Welcome to our Tuesday evening Asian session. I hope everybody had an awesome day today. So let's dive in. As always, let's turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. So we'll take a look at some fundamentals. We got some interesting things happening. Then what I want to do is I'm going to start off a little differently than we normally do. I'll just leave it at that for right now. And then we'll dive in. So let's change this over. So drop me a 1 in the chat if you can hear me okay, and if you can see my trading economics screen. Beautiful. All right, so global bond yields retreat. Let's go back. Bond yields in the US and Europe were falling on Tuesday as investors were hoping that the impact of high interest rates on economic growth will force central banks to slow down their monetary tightening. The yield on the 10-year Treasury note was down by 15 basis points to 4 8/10. Meanwhile, Britain's 10-year gilt fell for a second session to 3.6%. As markets hope for Prime Minister Sunak could offer more predictability and stability. All right, so they're hoping that the central banks change their tone. All right, if the central banks change their tone, then you could see, depending on the currency, that currency drop. If that happens, they haven't signaled that yet, though. All right. And we had U.S. futures fell. U.S. stock futures fell on Wednesday as tech-heavy NASDAQ 100 futures losing 2% as investors digest disappointing quarterly updates from big tech companies. S&P 500 futures also dropped 1%, while Dow futures lost 0.3%. In extended trading, Google parent Alphabet slumped 7% on weaker than expected earnings and revenue as the firm grappled with slowing online ad spend. Microsoft also tumbled 7%, right, reporting softer cloud revenue and offering a weak guidance, dragging Amazon shares with it, which dropped 4%. In regular trading on Tuesday, the Dow gained 1.7%, the S&P climbed 1.63%, and the NASDAQ jumped 2.25%. Those moves came as Treasury yields retreated sharply, right? As the benchmark U.S. 10-year yield pulled back to 4.1 after hitting the 15-year high of 4.3, right? So what you're seeing here is companies aren't making as much money, as much revenue, right? Things are starting to slow down from a corporate perspective, right? Income-wise, they still have the money to spend, but they're not making as much money as they did previously, right? So that's what you're seeing here, and this is why investors are hoping that the central banks change their tone, right? But as we know, the central banks have said they need to see this as a sustained place of slowdown. So that's where we are from that perspective. Okay. We'll leave it at that for right now. Over to the calendar, right? So let's refresh this because we had some Aussie data come in. CPI quarter over quarter for the Australian dollar came in above expectation, meaning, right, this is a key inflationary data point, right? So inflation is still increasing in Australia, okay? So that's what that says, which puts more pressure on the Australian Reserve Bank of Australia, I think, as they already stated that they wanted to see how their interest rate hikes have impacted inflation, right? So this is a data point that says, hey, yeah, it may not be impacting it yet. Okay, so that's what came in. Tomorrow we have a big day. So what you've probably noticed is the market is moving extremely slow. Okay, generally that occurs when you have key data points that are coming out, and the market is waiting to see how that information comes out. So tomorrow at 10 a.m., we have the Bank of Canada monetary policy statement, monetary policy report, and that overnight rate. Okay. It's expected to go up to 4%. Right. That's the expectation. So we'll see if the Bank of Canada comes in with that 75 basis point increase. Okay. Then you have the press conference coming in at 11 o'clock. On Thursday, you have the ECB monetary policy statement at 8:15 a.m. Right. So back to back rate statements coming out. And then tomorrow night, you have Bank of Japan monetary policy. Okay. So you see the market moving slow because they're trying to digest the information that's coming in from the earnings from these large corporations and these market movers. And they want to see how these interest rate conversations happen. All right. So that causes some consolidation in the market. All right. So any questions from a fundamental perspective? Newer team members, what questions do you guys have about fundamentals? No questions at all?
Don't have a lot of questions. Just, I think I just need more study time because what you said, I do understand. I just need to put more time in.
What do you need to put more time into?
Looking at the market and kind of just understanding for myself. I think that's basically it. Spending more time on the charts and kind of understanding how the breakdown is. I understand the red folders kind of are the things you need to watch and pay attention to. So I think that part is kind of self-explanatory. Yeah.
For sure. Okay, cool. So this kind of leads into how I want to start this session. I want to start this question with, what questions do you guys have regarding how to mark up your charts, right? Because I want to ensure that you guys are bringing those questions to these live sessions, right? So that we can answer those questions in action for you, right? We created this environment to be open and inclusive because we know that in a lot of spaces, you don't have the direct opportunity to ask questions to people directly in the moment, right? So we created this environment and the frequency that we meet so that you have the opportunity to ask us those questions and we can walk you through those points, and then you can go back and study more, right? So there's multiple components to the inner circle and why we created it the way that we did. But it's also imperative that you take what you're learning and you're actually marking up your charts and practicing. Nothing will replace the practice time. Nothing, right? So, David, question. What's up, man?
Okay, can you hear me now?
Yes, sir.
How you doing?
I'm doing well. How about yourself?
Good. It's been a while. Okay, it's been it's about starting from scratch and marking up the charts from top down. You know, like I'm using Smart Trader, so it'll be easier for you, in explaining to us how to go about that. You know what I mean? From the month top to down.
So how do you mark up a chart from the top down?
Yeah.
Let's do it. Let's go to Euro Swiss. So, a couple things.
You could hear me clearly, right?
Yeah. Can you? Is that ultimately what your question is, though? Is how do you do a top-down analysis?
Yes. I don't know if I'm explaining it. I'm explaining.
Say it one more time for me.
Yeah, the monthly, the weekly, the daily, and the 4 hour. Yeah. Support and resistance.
So you need help identifying support and resistance on the higher time frames?
No. I mean setting up the charts.
Oh, setting it up.
Yeah, setting it up.
Gotcha.
Yeah.
So that's going to depend on what package you have, right? But each package has a different number of workstations. Okay.
Yeah.
So that'll give you, these are your stations here, your workspaces, right? And based on the package, you have more or less. Okay. And you can add new workstations here, right? I'm at my limit based on the package that I have, but you can add more workspaces here. So how I have mine set up is I have the majority of them listed here. And then as you guys see, I have this all pairs section where I have the dollar index.
Could you set up all your workspaces on your pocket, in your pocket?
No, I don't have the highest package.
Oh, I have the middle one.
I have the middle one as well. So this is how I have my workstation set up, right? Okay. So you add your workspaces, you can put the pairs in here. Now, when you do that, you have the opportunity, it'll give you, I forget how the number that it starts with, but once you click onto that particular workspace, you click on this little icon right here, and this will give you the layout options, okay?
Right.
And you can click Manage Charts on Workspace. So here's where you add in the additional charts for your monthly time frame, your weekly time frame, your daily time frame, your 4-hour time frame, your 1-hour time frame. This is how I have mine set up. You don't have to set yours up this way. That's how I have mine set up.
Okay.
You can add those spaces here.
What would you say so far, how far to go? Like to the 6 to 15, or?
I'm sorry?
You have your to 15. Should I go to 15 or?
That's going to be totally up to you.
Okay.
That's not something I can determine for you, right? If you want to look at the 15-minute and use some of that data for entry opportunities, then yes. If you don't, then don't, right? So, but you have to determine that piece.
Okay.
On how low you're going to go.
Okay.
Okay. But you add in your charts here, right? Now, once you do that and you select your layout, it'll give you this. And you click this little square box to go into that chart. All right. So now this is just my monthly time frame.
Right.
Okay. So what I'm going to do is I'll clear all these out and we'll go top down. This is also for newer folks. You can see a top down analysis and pay attention to how I'm marking up the chart, but also pay attention to where I'm clicking on the screen. Right. For folks that are new to Smart Trader, pay attention to where I select. Okay. So you press this box here to open up that chart. Right.
Right.
Blank chart. Now you want support and resistance. So these are your smart features here. Okay.
Right.
Smart features. You do resistance and support like so. Puts the lines in for you, right? You want to understand how to identify them on your own with the swing highs and swing lows, but Smart Trader speeds that up for us, right? So that's my extreme high there. Actually,
should I do all the zones?
That's going to be totally up to you on how you see your screen. I started out marking out zones, but I changed to lines because it ultimately became a little bit more clear for me. And my chart wasn't as cluttered, but that's totally up to you.
That's what I mean. All the lines. Should I do all the lines? Or you say it's totally up to me doing all the lines also.
Do you mark all of the support and resistance lines?
Yeah.
I recommend doing so.
Okay.
So that you know where those levels are.
Okay.
All right. You want to identify all of the support and resistance levels that are the most recent that show up on the screen.
Okay.
Okay, because you want to know it in some of these monthly levels. Yeah, price won't get there for quite some time, but you have those levels noted for future reference, right? And it gives you, again, the practice and the repetition of being able to identify those areas.
Gotcha.
Okay.
Yeah.
So I'm putting in my lines here, right? You have horizontal lines, trend lines, rays, all of those deals in this section here, right? So I'm putting in all of my lines. I use black as
monthly,
my
as your
monthly.
monthly. Yeah.
Okay. So we got all of our monthly support and resistance noted. So now you right click, pops up this box, link all objects to lower time frame.
Okay.
Right. So doing that now takes it to all of your other charts.
Okay.
Okay. So now we go to the weekly, right? Now we identify support and resistance on the weekly time frame. Okay.
Okay.
Same thing that we did on the monthly. All right. Use blue for my weekly.
Okay.
Right. Each swing high is a level of resistance. Each swing low is a level of support.
Yeah.
Okay. For new folks, this may be a first or second session with us. A swing high is a 5-candle formation, right? With a center high point, 2 candles to the left and 2 candles to the right of that center high point. That is a swing high. That gives you a level of resistance. A swing low is just the opposite. A swing low is a low center point with 2 candles to the left and 2 candles to the right that are higher than that low center point, right? That's a swing low. I didn't mark this as a level of support because that level got broken, right? This was a level of support here before this candle closed below, right? So I'm not marking that level currently, okay? So swing highs and swing lows. Now, on your weekly time frame, these levels that we put in, you click each line, right? We already took our monthly levels down, so we want to click each new line that we added, link object to lower time frame. That takes it down to your lower time frames. We do that with each of these lines.
Yeah, okay.
Like so. Okay. Like so. Bang. So now we can take this off of this chart. We got those identified. Now, those weekly levels are also down on your lower time frames. All right.
Okay.
So now we go to the daily and we do the same thing. Horizontal line. I use red. Bang. Okay.
Yeah.
So. All right. Bang. Okay. Now, so we got our daily support and resistance in.
Okay.
Take that off. Now, from your daily time frame, couple things, right? So now we got our support and resistance in. Now we want to say, okay, which direction is price moving? Right? Price is moving down. Right? We agree on that?
Right. Yeah.
Price is moving down. Yeah. Okay. So what we'll do is we'll come to our last high, the highest point, and we'll start to deploy our fibs. All right. And again, I'm doing this and showing you guys it this way so that you can get the repetition to see how this flows.
So Ryan, one question.
Yes, sir.
On the I didn't see you do the lower time frame.
Correct. So this is going to be again something that you determine for yourself.
Okay.
But I stop at the daily time frame with support and resistance.
Okay.
The reason I do that is the daily, weekly, and monthly levels are what I've been able to identify, and Benny and I both in our back testing is those levels hold the most, right?
Okay.
So when price gets to those levels, and you have a catalyst, you get action in one direction or the other, right?
Gotcha.
And then when you line that up with a key Fibonacci level, right? It gives higher probability for those levels, right?
Gotcha.
So I want the highest probability levels that we're going to get a reaction of some sort. Okay. So I stop at the daily time frame. You can go down as low as you like. You can go to the 4 hour. You can go to the 1 hour. Right. That'll be totally up to you in how you choose to market your charts. Right. Over time, I used to go all the way down to the 15-minute time frame. Right. With support and resistance.
Yeah. That's why.
And over time, I've scaled back to the daily because, again, I want those levels that hold the strongest. Right. And this is what I've gotten to in my exploration phases. Okay. So I want you to explore this. Don't just take my word for it. Don't just take Benny's word for it, but explore what we're teaching you. Right. And practice it in your demo account. Right. Go in and practice and see what levels fit your personality best.
Okay.
Right. We're giving you guys the framework. Right. We're giving you the basics of a trading plan. And then you have to take those details and add in additional details based on your personality, right? Based on your temperament, based on your risk aversion, right? Risk tolerance, okay? But the basics of what we give you is the basics of the framework, and then you're able to then add in the details, right? And then adding in the mindset piece and how you think through things the best, right? Yeah. So I want you guys to, in order to get good in this space, in not just this space, but any space, you have to be willing to explore. You have to be willing to make mistakes. You have to, right? I don't know if many of you got to watch the Mindset Monday video that I sent out, but it talks about failure. The way all successful people have gotten to where they've gotten is because they've been willing to fail more than anybody else. They seek failure, be it in their workouts, in muscle failure, or they push themselves to levels that are beyond what they can currently do so that their body can then respond and they can then do it better next time. In this space, it's exactly the same. You have to be willing to explore and you have to be willing to fail so that you can learn the lesson from the failure, right?
Absolutely.
So in reality, failure is only an option if you quit. Yes, Ms. Cassandra, I posted it in the Inner Circle platform, and I also sent it out in an email. But you have to be willing to explore, and you have to be willing to make mistakes. But then you have to be willing to be open to learning from those mistakes. If you make a mistake and you allow that mistake to make you quit, that's when you fail because you chose not to continue moving forward. You chose not to learn whatever lessons were to come from that experience. That's the only time failure exists, is when you actually allow it to be a thing.
Okay.
Right? So you have to be willing to practice these things. Right? And I'm gonna, David, this isn't just this is for everybody. So I don't want to say just towards you, but for everybody, you have to be willing and open to explore and open to making mistakes so that you can learn how to see it differently. You have to be. Like there's no ifs, ands, or buts about it if you want to achieve great levels of success, great levels of growth. You have to be willing to make mistakes. You have to seek them. You have to push yourself to the levels of failure so that you can learn. It's a must. If you choose not to, that's okay too. That's your choice. But you're going to reach a certain level and not be able to get past that. You have to be willing to be uncomfortable. Have to be. But so I all of that to say, explore what we're teaching you, practice what we're teaching you, and then you'll start to be able to put those pieces together because you'll become more aware, right? So I'm running the fibs to the downside because price is moving down, right? Price came down, this moved to the upside, took that fib out. All right, cool. Got another high price and price pushed down. So those fibs to the downside got taken out. We'll start from the low, run the fibs to the upside. The price action, right, took out the A. So again, we flip the fib in the opposite direction. Down, right? Price pushed down, took out the A, but it came back down. So we'll run the fib again from the high to the low. Bang. So now we have a directional bias. Our directional bias is down. Why is it down, Ryan? Well, you have this AB boundary. Okay. This isn't bringing any fundamentals into the conversation, right? This is just sheerly off the technical piece. Okay.
Yeah.
You have an active AB boundary here, right? You guys saw where I clicked on this icon here, right, to get your smart fib and to run those, right? So now you have an active AB boundary here. You got a 618 retracement level achieved, right? You have a weekly resistance level here in line with that 618 retracement. All right, great. What happened after that? You got a swing high that formed and price started moving back to the downside. Okay, so now with a 618 retracement, the matching D extension is the 1618 extension level, which is here at 84 cents, right? So my directional bias on this Aussie CAD is to the downside, right? So as we go down to the lower time frames now, right, our directional bias is down. So the question that we ask ourselves is, are we in an extension or retracement phase, right? So currently on this fib, we're in a extension or down push zone, right? So as we move down in the time frames now, we'll be able to walk through this with support and resistance and with our fib levels to see where price is and if we're in a down retracement zone or if we're in a down push zone, right? Down retracement means prices pulling back, right? Okay. Down push means prices extending to the next level, okay? So right now, we got our retracement, price pushed down. We see here a retracement is happening, right? So we go down to the 4-hour time frame because now we understand our directional bias is what? Anybody? Directional bias is what?
Down.
Down, right? Directional bias is down.
Okay.
So now we go to the 4-hour time frame. Great. Take the support and resistance levels out. Now our directional bias is down. So we come to the high, right? And we deploy our fibs to the downside, like so. Bang. Right? So now on the 4-hour time frame, we have an active AB boundary. We're getting some consolidation right now, some sideways movement, right? AB boundary, what do we look for in these scenarios? Price made a strong move to the downside. D extension on the 4-hour was achieved. Whoops. I didn't bring these levels down. So these are my daily levels that I need to bring down to the 4-hour time frame.
Okay.
I missed that part. I apologize. There we go. Like so. All right. So now 4-hour time frame, right? So we came into this daily support level. whoops, hold on 1 second. There we go. Sorry. Came into this daily support level, right? We hit a D extension. Price created a swing low, gave us a new AB boundary, right? So when price gives us a new AB boundary, we look for a retracement, right? So now price is in your down retracement zone on the 4-hour time frame. Price is pulling back, right? So on a 4-hour time frame, if you trade off the 4-hour time frame, you want a high price to be able to do what?
Sell.
Sell a high.
Sell. To sell or buy. Somebody said both of them.
No, I said sell high.
Correct. You want a high price so that you can sell because our directional bias is down, right?
Okay.
So you got a fresh AB boundary. You're getting some consolidation right now. So we're looking for a retracement to occur, right? We're looking for a retracement to occur. So we're in a down retracement zone, right? So we get that now, right? Price is consolidating here. We're looking for this retracement. Now, if you trade these reversals, right, you could be in this trade in this retracement, right? You could have taken this trade once that B boundary formed and price hit this daily support level, right, for buy to get to that high price because we agree that the market moves in waves, right? Down, up, to then go down, right? So on the 4-hour time frame, you're looking for a retracement to occur. Okay. So we get that on the 4-hour time frame, we're in a down retracement zone. We saw on the daily time frame that price was retracing, right? We saw that small pullback action here, right? Right there. Okay. The lower time frames, you hear Benny say all the time, the lower time frames are just fractals of the higher time frame, right?
Okay.
So that action is this new AB boundary forming on the 4-hour time frame and price starting to pull back, right? Price starting to pull back. So now we want to say, okay, we get it, Ryan. We get it. We're in a down retracement zone. So how would I enter a trade in this zone, right? Now, you can go down to your 1-hour time frame, right? And look for the same details, right? You want to run your fibs on the 1-hour time frame, right? To the downside until they get taken out and see where price is, right? So we get here, we deploy our fibs to the downside and see what happens. Well, interesting. This pullback area off the daily time frame and off the 4-hour time frame, we also have a new AB boundary on the 1-hour time frame. And we're getting this sideways movement, right? So we're in a down retracement zone on the 1-hour time frame as well, right?
Yeah.
Now on the 1-hour time frame, we have a new piece of data that comes into play, right? When we talk about the Fibonacci sequence and the sweet spots that we trade, right? We know we also like to trade this 118, 127 zone when we do not get at least a 38.2% retracement, right? So here on the 1-hour time frame, we have not achieved a 38.2% retracement yet, right? We also didn't get it on the 4-hour time frame either, okay? So beautiful. So we call that a shallow retracement, anything less than a 38.2% retracement, right? So we got a shallow retracement, price pushed down, got to this 118 level, which coincidentally is in line with that daily support level, right? So if you follow me here, right, as we go down through the time frames, you're getting additional pieces of data that are telling you the same thing, right? On the daily time frame, you saw price starting to pull back, right, with those 4 or 5 candles. On the 4-hour time frame, you saw a fresh AB boundary at a key level of support, and you saw price starting to pull back, right? You got a shallow retracement, and price was starting to pull back. Now, here on the 1-hour time frame, you also have a shallow retracement. Price pushed into that 118, 127 zone. This zone right here. 118 extension level, 127 extension level, and now it's starting to pull back, right? So this move has already started to the upside, but it's still moving sideways, okay? So if you didn't enter this at the B boundary or down here at the support level, is there opportunity for you to get into this trade? Sure, yes, there could be, right? And this is where, as you're going through this exploratory process, you completing the details of your trading plan, right? On what details do you need to see? What confirmations do you need to see to enter a trade, right? We talk about trend line breaks. We talk about swing lows. We've talked about the cloud, right? We've talked about using your stochastic or any of your momentum indicators, right? So you can now choose what key pieces of confirmation do you need to enter a trade, okay? So here on the 1-hour time frame, price has just been pushing sideways, right? You don't have a clear direction yet. So if you choose to use trend lines, beautiful, right? You run your trend line from the high down, not cutting off any wicks. The goal of the trend line is to get as close to the lowest point as possible without cutting off any wicks or bodies, right? So bang, right? 1 touch, 2 touch, you use it as a tabletop, right? Don't want anything to go through the tabletop. Bang, that's our outer trend line, right? So now we have the opportunity to draw an inner trend line. Start from the last touch, extend it out, and bring it down. Bang, so this is our next touch here. Boom. Right? That's our middle trend line. Now, price is moving sideways, right? You may get a 382 before this trend line gets broken, okay? So this trend line is what you want to see broken if you're using trend lines for an entry opportunity, understanding that on the 4-hour, right, your 618 retracement level, another key sweet spot for us, is way up here. Right? Sweet spot is way up here above this level of daily resistance at 89 cents, right? So if you come back to the 1-hour, that 89 cents level is right here at the A boundary of this 1-hour fib, okay? So if you get a trend line break here, right, you may have the opportunity to buy up to this 89.107 level. Okay, so that's one key point of confirmation that you could use.
Okay.
Okay. Question?
No. I said, okay.
Are you guys following me so far? I know I gave you guys a lot and I haven't asked that question.
Yes.
Everybody following me in this process?
Just the sweet spot. I'm sorry, I think I'm following pretty well, but what do you mean with our sweet spot? That's the one we are saying that's the biggest area for.
So these are the areas that we like to trade. Benny broke this down a couple of days ago, I believe, right? So the sweet spots that we like to trade, right? As you're going through the training, we break this down in pretty deep detail, okay? So we like to trade these areas. We like to trade the B boundary, right? Well, no, let's go back. We like to trade the 618 or deeper in a retracement, right? If price pulls back to one of these levels, right? We like price to come back to these levels. And we like to take trades in the zone, 618, 786, 86 retracement levels, right? If we're trading with the trend, right? And then we trade it to the matching extension level, okay? So that's one sweet spot that we trade, right? We trade that for many reasons, right? These Fibonacci levels are also key support and resistance levels, right? But also from a risk management perspective, right? The deeper the retracement, the better your risk to reward, right? So if you place a trade in this zone, right, we teach placing your stop outside the A, because we know we don't determine where price stops, right? When you're looking for your C, A, B, C, right? We know price can float in this zone anywhere, right? And as long as it doesn't take out the A, it has no choice but to go your way. So from a risk management perspective, we place our stop outside the A, right? If it takes out the A, high probability it's going to continue moving in the opposite direction, but your risk management will be in place, right? You're only risking, in this just particular scenario, 80 pips for the potential to gain 283, right? So from a risk to reward perspective, you're in line, right? That's greater than a 2-to-1. It's greater than a 3-to-1, right? So you only have to win in this scenario. We'll just say it's 3-to-1. You only have to win 3 out of 10 trades to make money.
Yeah.
Right? If price doesn't go your way, you only lost 80 pips. Right? And Benny broke down how to calculate risk management, how to calculate your risk, how to figure out your lot size. He broke that down over the past couple of days, right? So this 618 retracement and deeper is one of our sweet spots. Okay. The next sweet spot, you're welcome. The next sweet spot, we got 3 of them, right? The next sweet spot is your B boundary, right? Your B boundary, because we know when a new AB boundary forms, high probability, right? Because the market moves in waves, you're going to get a pullback of some sort, right? So when that new AB boundary forms, that swing high forms, gives you a level of resistance, right? So you can trade your B boundary back to, right? Let's call this counter trend trading, right? You can trade it back to at least a 38.2, or you can trade it back to a 61.8, right? So this is the second sweet spot, right? And you can place your stop in this scenario above your level of resistance, right? Because that B boundary that swing high that was created is a level of resistance now. So you can place your stop outside the B boundary, right? For a tighter stop, or you can place your stop outside the D extension. That's going to be up to you as you explore. I'll explain why that D extension stop loss might make sense in the next scenario, right? So B boundary is your second sweet spot, right? That you can trade counter to trend in the retracement, right? At least back to your 38.2. Okay. So that's the second sweet spot, right? So let's copy that, bring this down here. Okay. Sweet spot number 1. Sweet spot number 2. Third sweet spot is this 118, 127 zone. And we trade this 118, 127 zone when we get a scenario like we have right now, where you get a shallow retracement, anything less than a 382, right? When you get anything less than a 382, approximately 80% of the time, price pushes into this 118, 127 zone. And then gives you a deeper retracement, right? So high probability U-turn area, high probability U-turn area, high probability U-turn area, right? We got 3 spots that we like to trade. Okay. So this 118, 127 zone, if you get a shallow retracement, price pushes up, breaks that B boundary, right? And pushes higher. We consider that an 80-20 scenario, right? 80% of the time, price comes into this zone and then reverses and gives you a deeper retracement, right? 20% of the time, price just goes to the D extension because momentum is that strong, right? Momentum is that strong. And that's okay, right? I'll take the 80% odds, right? I'll take that, okay? So now in this scenario, when price does give you the shallow retracement and pushes into that 118, 127 zone, right? Just like we have here, shallow retracement, price pushed down to this 118 level, right? Now you have the opportunity to enter that trade in that zone, right? And you can place your stop either outside the 127 level, right? Outside the 127 level, or you can place it outside the D extension, give it a wider stop to give the market room. We call it giving the market room to breathe, right? In your exploratory phase, you'll determine where you best like to place your stop losses. Do you like to play with wider stops and trade smaller, right? Or do you trade with tighter stops where you'll get stopped out more, right? But you can trade with a larger lot size. Now you have to be able to mentally manage getting stopped out more, right? You have to be able to manage that mentally. People like the higher lot sizes, but they don't talk about the mental piece that you have to understand in order to trade with a higher lot size. So you have to keep the mindset piece in mind. It has to be taken into account if you're looking to trade with tighter stop losses, right? So you'll be able to determine where personally you like to place your stop loss as you explore this process. All right. So price pushed into this 118, 127 zone, and we like to get a high price in order to sell, right? So you can trade this back into your sweet spot, right? Back into the 618 level, right? And if you trade off the 1 hour time frame, or if you trade off the 4 hour time frame, the process is the same. If you get a deep retracement on the 4 hour, the deep retracement being 61.8% or deeper into that sweet spot, right? If you get that on a higher time frame, on your lower time frame, your A will get taken out, right? So if price does push up to that 618 level off of the 4 hour fib, right? Which we'll do this. You can copy this just to show you what this looks like. Right? We'll take that fib down to our 1 hour time. Right? So we zoom out and look at this. Right? This is the 1 hour time frame. This larger fib here, that's the 4 hour fib. Okay. And this gives you the visual representation of the smaller waves or the fractals of the time frames. Right? So these smaller waves are your 1 hour waves within the larger 4 hour move, right? So if price pulls back to a 618 retracement level on the 4 hour time frame, it's going to take out your A on the 1 hour. And that's okay. If you play this retracement, right, you're in the money. Okay. If you're waiting on a high price, right, you'll wait until you get your confirmations that price is stalling and reversing. The same that we're looking for in this move to the downside, right? Trend line breaks is one, right? Swing low with a trend line break, okay? Or if you trade with the cloud, beautiful. We can drop the cloud on here on the 1 hour time frame, use it as a confirmation point, right? Use it as a confirmation point, and we see here using the cloud, right? That we got a break of the cloud, TK crossover, we got a Kumo twist, we got the lagging span broke through price, right? So that's our confirmation for entry. Now, price is moving to the upside. You're in this trade to the upside if that's what you use for confirmation, right? So we have multiple entry techniques that we've taught, that we teach, okay? So that's how you would enter a trade on the 1 hour time frame, looking for those confirmation pieces to look for that trade to move to the upside, right? Our bias overall is down, but we know that we're in a down retracement zone currently. So we're creating this retracement wave in this wave sequence, right? So if you don't want to trade the counter trend move, beautiful, no problem. You wait for price to make its way. You wait for price to make its way to the upside. And once it gets to your zone, now you can look for those entry opportunities with your trend line, with your cloud, right? The same process. Okay, you guys follow me?
Yes.
Yes. Thank you. Yes.
You're welcome.
Thank you.
New song. I'm not sure who that is. New song. Can you tell me your name and what's your question?
That's me. I'm sorry, Ryan. I'm trying to take my phone off. Actually, my real name is Mike.
Mike.
Yeah. So I
Glad to have you, Mike.
Thank you. I want to go back to the AB. Unfortunately, you were talking about being a potential opportunity to get in on the sale. If you're not actually sitting there looking at the charts forever, how would you know when that fee is forward? Like, well, how would you anticipate that popping on your chart so that you'd be able to get in on that?
You won't be able to anticipate price action, right? You have to be able to see it. And the reason we use Smart Trader, right, is once that swing low forms, this new fib pops in. It automatically populates with Smart Trader.
So essentially, then you would have to be at the chart when that Smart Trader pops up that B.
Yeah.
Okay.
Right. Or you can pull it up on your phone and take a look at it to see where it is periodically. You can set once that D extension gets hit, right, as prices move into the downside. If you want to set an alert, right, you can set an alert, add alert, right. You can do that if you want at these key levels to see, okay, price hit a D extension. I know that with that D extension being hit, potentially a new AB boundary is going to form soon, right? So that'll get an indicator. And now you know, let me check back in an hour or two. If you're trading on the 1 hour time frame, let me check back in 2 hours to see where price is, to see if I have a swing low.
Makes sense. Thank you, Ryan.
All right, you're welcome. Okay. So we walked through a lot here, right? We did a top-down analysis. We walked through how to identify these tools in Smart Trader. Now, Smart Trader has a full library of tutorial videos that walk you through the whole platform, right? If you're not used to the platform, I strongly suggest you going into that video library in Smart Trader and watching those tutorial videos, right? They're going to be able to break this platform down for you in all aspects. Right? They already have the videos already done. Okay. So highly suggest you doing that if you have questions on how the platform works. All right. But you were able to see where I was clicking, right? And what I was doing to utilize the tools that we use. Okay. So you can definitely go back and watch this video as well. That's a top-down analysis. That's how you look for your entries, right? What questions do you guys have on this process?
Where would you add the cloud with the scenario?
For me, I use the cloud on the 1 hour time frame, right? And I wait for the 1 hour confirmations of the cloud break, the TK crossover, and the Kumo twist, the cloud in the bullish fashion here, right? So my entry on this one would have been in this area here. The reason being, this push up is when the lagging span broke price there, and you had a bullish cloud formed here. So that would have been my
Okay.
entry, and I would have sat through all of this. I would have placed my stop outside that 127 zone, right? And I would have allowed price to do its thing and draw down a little bit here, right? And I'm around break even, maybe up a few pips as price currently stands. That would have been my entry on that, right? But you can use it on the 1 hour time frame. If you want to go down to the 15-minute time frame, you can use it there as well, right? Oops. You can use it on the 15-minute time frame as well, right? So here, we'll take that out. Don't want that. We'll clear this out. Don't want that, right? So here on the 15-minute time frame, you drop your cloud on. Bang. Right? If you entered back here, right, you could have had an entry here, right? Push up, lagging span broke through. You got your bullish cloud here. You got your TK crossover that occurred here, right? You got all 4 of your points. Push up, the lagging span finally broke through. You enter there. You would have been in some drawdown here, right? But as you allow price to do what it does, it moved in your favor, right? So you could have entered that off the 15-minute time frame if you want to, right? The process that we just looked at from the monthly down to the 1 hour time frame in those entry techniques, it can be used on any time frame. The entry techniques do not change. The top-down analysis and identifying support and resistance, how to use the fib, none of that changes. Doesn't matter the time frame, doesn't matter the pair. The process is exactly the same.
Thanks again.
Absolutely. Absolutely.
Yeah, right. And thank you so much.
You're very welcome. Questions?
Okay.
Questions
Yes,
on top down? Oh, go ahead, David. Sorry.
I did demo. I haven't started demo trading set up yet. So
Have you started marking up your charts?
Yeah, I'm marking up the chart, but no.
Okay.
So when is a good time for us to start demo?
You should start demo trading. You should start pulling the trigger when you have rules that you can, a basic framework of rules to follow.
Okay.
Right.
Okay.
So we give you a basic framework of rules to follow. Now you fill in the details, but you can't fill in the details if you're not practicing. Right.
Okay. Right.
So as you're marking up the charts and you see price, you see price create a new AB boundary at a level of support, take the demo trade, see what it feels like to go through that process.
Okay.
Right.
Got you.
Marking up the charts is one piece of it, right? Pulling the trigger is the next piece.
Right. That's
demo. The demo account is where you practice, right? It's not your real money.
Right.
So you can practice, you can start to understand what it feels like to take trades at the different sweet spots. So this is part of that exploratory phase where now you can determine through practice what sweet spots you want to trade, because you may not trade all 3 of those.
Got you. Yeah.
Right?
Absolutely. Yeah.
You might pick, I'm only going to trade 80-20s. I'm only going to trade new AB boundaries, or I'm only going to trade deep retracements. And that's beautiful. Right? Now you can be really, really specific about what you're going to do and just do that. Just develop the habits to do that one thing.
Yeah.
You don't have to trade all of them. You don't have to trade all 28 pairs. We mark up all 28 pairs because we know that it's extremely important to get the practice in. Right? We also know that price action moves the same on all pairs. Right?
Right.
You know, the process is the same on all pairs. So as you get comfortable and as you start to get proficient and you nail down your rules through practice, now you can say, okay, I'm going to go from trading Euro USD to I'm going to trade all Euro pairs. Right. And then as you get more practice and more comfortable, okay, I'm going to trade Euro pairs and pound pairs. Right. When these pairs get into my zone, I will take the trade. And then you can get to the point where, okay, I'm going to trade euro pairs, pound pairs, and CAD pairs. When those trades get into my zone, I have all of my charts marked up because I want to get the practice in, but I'm only going to trade these currency types, right? So after I mark up all my charts to get the practice in, I'm only looking at these 4 trades that meet my rules.
Absolutely.
When a trade meets my rules, I'll take it. If it does not meet my rules, I do not take the trade. Part of that taking the trade process is calculating your risk. On every single trade you take, you must calculate your risk. If you don't, you're gambling. You might as well ride down the freeway and throw your money out the window. or you can mail it to me.
Yeah.
Right?
Okay.
Right?
Yeah.
But it's so important. It's so important, my people. It's so important that we practice.
Yeah.
It's the only way you're going to develop the habits, the only way you're going to develop the discipline, the only way you're going to start to see this more clearly is to practice. And you have to know how it feels. You have to pay attention to how it feels. What thoughts do you have when that trade goes in a drawdown? Does your heart rate increase? What does it feel like to even initiate the trade? Are you anxious? Are you nervous? If so, why? This is all part of that exploratory process, understanding you better. You have to understand you better so that you can control your thought process and your mindset as you're going through this process, because you're going to lose some trades, right? You're going to go outside of your rules, but you have to be able to identify that and say, okay, why did I do this? You understand why you did it. Now you can put in guardrails to keep yourself more in line to make that progress. In this space and in life, there's no such thing as perfection. You will not win every trade. You will not stay in your rules all of the time. You'll step outside of that, but you have to be able to identify that earlier when you made that wrong or that misstep to be able to bring yourself back in line. It's about identifying that sooner and sooner, right? But you got to be willing to explore to be able to understand that. You got to be willing to practice. Got to be willing to practice. You can market your charts all day long, but you'll never know if a trade is going to go in the positive or in the negative if you don't pull the trigger.
Okay.
And the demo account is there so that you can pull the trigger and practice to get those repetitions in.
Okay.
To understand your thoughts, to understand your personality. I hope this was helpful.
A lot.
I know I only got to one or a couple questions, but if anybody else has any questions, please, please, please ask them. What other questions do you guys have? No questions at all. I know we didn't get to any pairs today, but I think this conversation was important.
This conversation was awesome for me. Thank you so much.
I appreciate you asking the question, David, because this is where I was going anyway.
Okay.
So look, we got new folks on the call today. It's imperative that you go through the training in your back office. It's imperative. You go through the training. We give homework assignments. It's imperative that you do the homework assignments, right? You do the homework assignments is implementing what you learned in that lesson, right? The implementation is imperative. You can't skip that part, right? Showing up to the live sessions or watching the recording and asking the questions that will come from the lessons that you're learning. It's not if questions come, it's when they come, because they will be there. We have these live sessions not only to identify trade setups, but also to be able to answer the questions to show you and to help you put those pieces of the puzzle together. So watching the videos, doing the homework, showing up to the live sessions or watching the recording and asking the questions, be it in the Inner Circle platform, right? Or in the Facebook community, asking the questions, post your chart. What's your question? What are you running into? What do you not, what's not clicking for you? And we can answer that question for you or those questions for you. No question is a dumb question here, right? Next thing is your process is your process. Your timing is your timing. Don't compare yourself, don't compare your journey to anyone else, because no one's experiences will ever be the same as yours. So it's about where are you today and how can you take one step towards the goals that you have in the life that you desire, not anybody else's. So don't compare your journey as you're going through this process. Don't compare your journey when you're in life, right? It's really, really, really important. The next thing is perfection doesn't exist. You guys heard me say it, but I believe that with everything that I have. Everybody will always have a different perspective on everything, so therefore nothing can be perfect, right? The only thing that you can do is be the best version of yourself. And the only thing that you can do is work towards progress in the direction that you desire to move. Progress is, quote unquote, the perfection. Growth being 1% better every day. Even when you make mistakes, being able to learn from those mistakes and then take one step from that learning. That's the perfection. Progress is what we seek. Growth is what we seek. The better person you become, the better trader you will become. Right? In this space, we're not going to candy coat stuff. We're not going to tell you that you're going to get rich overnight. We're not going to tell you that this process is easy, because it takes a lot of work. Right? It takes a lot of work. But if you're willing to put in the time, the effort, the energy, right, you'll be successful. But you have to search your own soul and determine that. Right? You got to determine if you're willing to put in that time. Jerry, you had a question?
Hey, Ryan. Yes, just right quick. Where do you go to set up your all pairs workspace?
I just created that as an additional, I just labeled it that. That's just the name that I created for it. Just like I created
right, but how do you get the different pairs and the different
I just searched it here. So I use these workspaces, right? So here, the additional dollar pairs that I don't have, dollar yen, dollar CAD, dollar Swiss, I use this this section, right? This chart for those.
So you just click on that section and then you can just add it there. Okay.
Yeah, you can just search it. Yep.
Cool.
So I do gold, Bitcoin, silver in this top box here. I have oil. I use this chart just for oil, right? I use this chart here for all my New Zealand pairs. So I'll just search them here in the box as I go through. Dollar index, I keep it here. And then the couple additional pound pairs, pound NZD, pound Swiss, I do it here.
Okay, thank you.
You're welcome. Kim, to do the homework, you can post it in the Inner Circle platform under the video, in the Inner Circle platform in the community, right? Or we found that it's a little bit easier if you're on Facebook. You can post multiple charts. So as you're doing your top-down analysis, support, resistance, trend lines, you can post multiple charts, multiple images easier in the Facebook community, right? So you can do your homework in there, ask any questions that you have. It's a little bit easier to post it there as opposed to in the Inner Circle community, where you have to post your main image, and then in the comments, you have to post your additional images, right? So it's totally up to you. You can post it in either section, but if you're going to do it in the Inner Circle community, do it in the community section, not under the actual video of the training. Okay.
Ryan.
David, what's up?
Okay, is when you post it on Facebook, is it visible like to friends or just the group?
It's only visible inside of the Facebook group.
Okay.
The Facebook group is private, so only people that are in the group can see what's posted there. Appreciate you, Ebony. Appreciate you, Kim. What other questions you guys got? No?
I have another question, but I'll save it for mindset Monday.
I got about 5 minutes. What's up? What's the question?
No, I save it for mindset.
Okay.
Yeah. I make a note. Yeah.
Okay. All right, good people. Ms. Cassandra, you got a question?
Yes, if you have about 5 minutes, can you take a peek at Euro Aussie 4 hour?
Euro Aussie. Let's take a look at it. So this Euro Aussie, right? Daily time frame, sitting at a 50% retracement level, right? 50% retracement level pushing sideways, okay? We know we got Euro news coming in on Thursday morning, okay? We got this consolidation happening. We drop to the 4. This is what you have. You already got a 382 retracement, right? Price is hovering at this daily level here. What I would like to see, obviously, my feelings don't matter, but I'd like to see this D extension get hit before we get a retracement, right? So this one is in between right now. Okay, we got a 382 retracement. We broke this weekly level that was key, right? This was a key weekly level. Now we're hovering in this range. So ultimately, we want to get a breakout in one direction or the other. Okay, so pull this out. We can just look at what we have. And what we have is this range right here. Right? So either we get a breakout to the top and a retest and a hold, right? We get a push up to hit that D extension, then a retracement, right? Back to the bottom of the range. Or we get a breakout of the bottom of the range, retest and hold, and a continuation, right? So this one I'm sitting to the side on because I need to see one of these 3 scenarios, right? If we push back to the bottom of this range and this weekly level holds, I'll look for a buying opportunity to play this back to the upside. Okay. If it breaks out of the bottom of the range, I'm looking for a retest of this weekly level and that level to hold, get a swing high, and then I look to short it potentially back down to this daily level at 147.
Okay, got it.
Okay?
Thank you.
But I really would love to see this D extension get hit in either one of those scenarios, right? And give me a fresh AB boundary to work with.
Okay. All right. Cool.
And
Thanks.
then, right, so what makes it interesting, right, to kind of some of your questions there, right? On the 1 hour time frame, you got an 80-20 scenario. We're just hovering sideways. Okay, so what we could see is that push up and break that, get to that D extension and the 4 hour D extension. And then we'll have fresh AB boundaries to then make decisions from. Okay. So if we get that, then, right, a push back down to this weekly level would be inside that AB boundary for an extension higher if the ECB comes in hawkish.
Okay, so you would wait for the fundamental news. I mean, even though you, okay.
Yeah,
okay.
we're going to need a catalyst to break this consolidation in one direction or the other.
Got it.
I don't see it just doing it with the climate as of today because, right, everybody's watching to see what the other person does. Right. So I'd be patient on it and wait for one of those scenarios, right? Wait for a breakout to the downside or to the upside.
Okay, got it. Thank you so much.
You're welcome. Last call. Any questions before we wrap this thing up? No? All right. So again, right, Ben will be back with us tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. Got news happening. So take a look at your CAD pairs. Make sure those charts are marked up so that you can see how the market responds to the fundamental information, right? Once the market responds, once you see the reactions, now we can see where price gets pushed and see if our rules are met to enter a trade at that point, right? We're not anticipating the news. We're not trading the news. We don't recommend doing that because you don't know how the market is going to respond, right? If your rules aren't met, don't take the trade. Cool? I appreciate you guys, man. I really do. I really do. So
thank you, Ryan. God bless you, man.
You're welcome.
Thank you.
You're welcome. You guys have a phenomenal evening, phenomenal morning. If you're across the pond, and we'll catch you at 6:30 a.m. Eastern Standard Time. Peace.